Good day, fellow investors. We discussed Warren Buffett's prudence strategy with a lot of cash, and in this video I want to discuss his cash or invest rule, because you might be wondering whether to invest your cash now or hold it for dry powder. Warren Buffett has 382 billion of cash, and as he discussed in his Thanksgiving note, he is going quiet, unfortunately, but okay. This is the key here, what he discusses. A decade or two from now, there will be many companies that have done better than Berkshire. Our size takes it toll. However, Berkshire has less chance of a devastating disaster than any business I know, and that is because of the cash. So what is Buffett's perspective on cash? I think that he's getting now his a little bit less than 4% on his 3-month treasuries that he invests all that cash. However, I think that if there is nothing better than 8 to 10% for that huge pile of cash, he prefers the 4% of certainty when it comes to the yield there, or 0 to 4%. He prefers the certainty rather than risking in investing in a business that has a 7% yield, which is 5% is the average for the businesses now around, especially of that size. That's also why he sold Apple. So 7% returns can easily, in a crash, in a disaster, in a recession, go to 12 or 15%. And that's why he is prudent. He'll just wait for private equity to crash, things like that, then get his double-digit yields, and then pound on opportunities. In the meantime, always keep in mind, stock prices can, like it has been the case for Berkshire 3 times in 60 years, so every 20 years you can expect your stock portfolio to fall 50%. Your cash cannot happen to that, even if it will fall 50% every 10 to 15 years on inflation. So cash, the Buffett rule, if you don't have 10% investment return opportunities, you go to cash. That's simple. If we look at our value investing quadrant, here there are 2 that will likely offer 10% with, let's say, medium or low risk. So you can check my video on the quadrant discussing those. Also, this video on my value hedge, some other dividends, 6 stocks I own. And then you can see, okay, do I prefer the risk and reward of those businesses or simply waiting in cash? I think that is the answer there. Around the 10% situation, we don't have the size. Maybe you have the size of Buffett, 300 billion lying around. If that, then it's hard to find. But if you have less than a billion, which I assume most of you have, some of you maybe have more, but if you have less than a billion, then that rule, Buffett's rule for cash, can be applied. 10% or higher, I put my money in. If I really can't find nothing that I sleep well that offers me above 10%, I sit in cash. Let me know what you think in the comments. Check my research platform for investment ideas for 10% or more.